It's Market Day Report, and here we are at midday. Existing home sales fell more than expected in June, suggesting possibly a market slump, and higher mortgage rates might be to blame. That's underlying what we'll be talking about in just a moment. First off, we'll start with the corn market. It's been under pressure all day long, $3.98.5 on the September. 3/4 of a penny lower. December at $4.17.5. It's a half penny lower. Kind of a recurring theme we've heard throughout the morning is crop conditions at 9-year highs. That's the pressure in the corn market. What about soybeans? New crop 10.29 1/4. It's up 3 3/4 cents. Wheat market has been lower, down 7.5 at 5.42. Hard red off 8 1/4 at 5.25. Spring wheat lower, and the cotton market, well, a little higher, up 15 on the D's at 68.40. And just because we're seeing move higher on rice, and actually the deal with Japan, the U.S. and Japan agreement, they're opening their market to U.S. rice, and that's bolstered rice prices this morning. Chris Robinson's with Robinson Ag Marketing. Scott Shellady is the cow guy. We've got both of them here, and let's start on the trade topic. It's something Scott and I talked about 30 minutes ago, but again, how important are these trade deals for commodities? Let's start with you, Scott.
Well, I mean, it could be a lifeline for some of the producers that are waiting for the weather to get bad and maybe get better prices. Now, nobody wants to see any crop degradation from bad weather. They always want it to have to be their neighbor. But at the same time, the two things that we talked about a half hour ago are it's a weather market and there's still time, but also maybe some of these trade deals come through and can help bolster prices for the consumer. I mean, the producer in the short term. Now, are we going to be able to get up and even cover the gap that we've got in D's corn around 430 and change? I mean, it's going to be hard. And each day that goes by, the shorts' hands get stronger because there isn't anything out there that's going to move the market higher. So as the weather is, I mean, the bottom line is, Tony, I'm old. And if I can just look at one thing and tell you that something's up, and that is the fact that we've got triple digits in as far as heat goes, and we can't rally corn. That's the bottom line. Now, you can make any excuse you want around it, but the bottom line is that we've got triple digits and we can't rally corn. Something's wrong.
All right, Chris, what are your thoughts?
Well, I'd say, you mentioned the trade deal. I mean, it's Japan, who's our fourth biggest trading partner, and Indonesia. We really need to, get to the point. We need to deal with China, and that's going to be the major one. China takes 1/4 of our soybeans, and China has been kind of sitting on its hands, not importing as much as they have in the past couple of years around the world. They're in a slowdown as well. So you kind of have a perfect storm for the bears if you're a bear, because you have China slowing down. You've got huge supply. We had a big crop in South America. It looks like, and everybody's going to argue about it, but it looks like we're going to have a very large corn crop here. What's the yield going to be? 181. You have people throwing out even higher yields than that. I don't play the yield game. I learned a long time ago to watch prices. And Scott's right. There's still time for us to get a recovery for producers, but we need a China deal, and we probably need some sort of August weather issue. And I think that's why soybeans still have a little bit of a bid. First, you had the trade deal with Indonesia and Japan. That's a positive. But soybeans are made in August. So soybeans may be the last saving grace for bulls if we get something here in the next 6 weeks.
Okay, so what happens, though, when you've got low prices? You either have to find somebody to buy it or switch crops. I thought this was interesting. U.S. farmers planted 1.9 million acres of peanuts this year. It's the highest since 1991. The reason? Low cotton prices. All right, we'll come back in a moment. We'll pick up the conversation with livestock futures. That's next. Market Day Report continues after this. Been watching some of this summertime classic day 3, 320 weaned steers, 650 pounders, 408. Another 100 steers at the 575 weight, 419. Wow. Strength out in the country, and we're seeing strength in the market in Chicago. August live cattle, 226.62, up $1.65, and even 223 on the October, and it trades $1.87 higher. Feeders have bumped above that 330 level, 330.22 on August. It's $1.95 higher, and up 205 on September. It's already cleared the bar at 331, but trades 330.62. Let's bring back in Chris Robinson, Robinson Ag Marketing. Also, Scott, the cow guy, Shellady. Okay, Chris, let's start with you and cattle. What are your thoughts?
New highs. Stock market keeps making new highs. We had a little correction back in April when the stock market corrected. We do have a cattle on feed coming out this Friday. I don't know, the past year, I can't remember the time when we had a cattle on feed that hurt this cattle market. As strong, as dismal as the row crops have been for the past 3 years, and you can go look at that chart, we keep talking about it all the time, the market has just been on fire really since the COVID lows for cattle. We don't have enough cattle. The consumer keeps going and buying $14 a pound beef at the grocery store, which is amazing. And you see it in the futures prices. We just keep making new highs every day. So we took out 330. I remember when $3 was oh my goodness, feeder cattle were $3. Now we're at 330, 335. That opens the door to 350 feeder cattle. So all I can say is, and I think Scotty will agree with me, one of these days we're going to have an elevator trip down, and nobody knows what's going to cause it. In the meantime, they're almost daring people to hedge cattle because something's going to change. There's going to be some piece of news, and people are going to say, well, why didn't we hedge 330 cattle when we had the chance?
All right, Scott, final thoughts?
It's playing the game. I mean, outside of this Friday's numbers, it's playing the game it plays. I mean, look, a week ago Monday, we were off $5 or $6. I mean, and so slowly but surely, we gained $1 or $2 a day, and now we're higher than they were before we had that flush, when everybody thought, hey, maybe this is the top. So here we are again. I agree with Chris. I mean, it's all about how many different ways can we ask the question, are we replenishing the herd? That is the bottom line when it comes to cattle, and until we see the consumer show up some weakness, it's probably going to be par for the course right now.
All right, Chris Robinson, Robinson Ag Marketing. Scott, the cow guy, Shellady, joining us here on Market Day Report.